Hi y'all, let's talk about the tax problem with the Genius Act. So it's just made history as the first federal crypto law in the United States. It's created a regulatory framework for stablecoins, digital tokens that are pegged to the US dollar and designed to behave like money, but the IRS still treats stablecoins like other crypto as property. That contradiction isn't just confusing, it's really a serious problem. So stable coins such as USDC and USDT and PYUSD are built to be stable, fast, and easy to use. You can send them across borders, pay for services, or use them inside a decentralized finance platform known as DeFi. So these platforms are like digital versions of banks, but without the bank. They run on code instead of people, letting users lend, borrow, and trade assets directly with one another. So stable coins are often used as the cash inside these systems. So the Genius Act recognizes how useful stablecoins have become. It requires issuers to hold full reserves, submit to audits, and operate under financial licenses. In short, it treats stablecoins just like digital cash, something you should be able to use without triggering a tax headache. But the IRS hasn't caught up. Under current laws, stablecoins are classified as property, just like Bitcoin or Ethereum. That means every time you spend, trade, or redeem a stablecoin, you're supposed to calculate capital gains or losses, even for small, everyday transactions. So this creates a bizarre situation. One part of the government says stablecoins are money, another says they're assets, and users are stuck in the middle trying to reconcile two incompatible systems. For businesses, it's even worse. Accepting stablecoins means tracking the fair market value at the time of every transaction, then reporting gains or losses later. It's like using Venmo and having to file a tax form for every coffee you buy. That's not just impractical, it's a barrier to adoption. The Genius Act doesn't fix this directly, but it makes the contradiction impossible to ignore, obviously. If stablecoins are going to be regulated like money, they need to be taxed like money too. The IRS already has a framework for this. It's called the Internal Revenue Code Section 988. Although this section is for foreign currency, it exempts personal transactions from tax reporting if the gain is under $200. That's called a de minimis exemption, and it's designed to keep everyday purchases from triggering tax chaos. You don't report gains when you buy a sandwich with leftover euros. Why should you when you use USDC to pay for a service? Applying the same rule to stablecoins would make them usable for everyday payments without turning users into accidental tax criminals. It's not a loophole, it's parity with how other currencies are already treated under existing law. Until then, users are stuck in a legal paradox, using money that's taxed like stock. And if regulators want crypto to evolve into a legitimate financial tool, they'll need to resolve this contradiction very fast. Well, that's it for now. Please like and subscribe, and I'll see you next time.